Every single trading course you've ever bought, every YouTube video promising you financial freedom, every Instagram millionaire flexing their Lamborghini and showing you screenshots of their wins, they're all lying to you. Look, I'm going to be brutally honest with you right now. That $100 sitting in your trading account, in 30 days, it's either going to be completely wiped out, just like 92% of new traders, or it's going to be the foundation of something that literally changes your entire financial future. Forever. And here's the absolutely insane part that's going to sound like complete BS until I prove it to you in this video. The difference between these two outcomes has nothing, and I mean nothing, to do with how much money you start with. It has nothing to do with the strategy you use. It has nothing to do with how many YouTube videos you've watched or how many courses you've bought. Want to know what actually separates the 8% who make it from the 92% who lose everything? It's something so simple, so fundamental, that most people completely overlook it. And once you see it, you can't unseen it. Stick around for the whole video because what I'm about to show you is going to completely mess with everything you thought you knew about trading. And fair warning, some of you are going to hate what I have to say. Some of you are going to close this video in anger. But the ones who stick around, you're going to have an unfair advantage that most traders will never, ever figure out. The brutal reality check. All right. So you stuck around. That's good. That already tells me something about you. You're willing to hear uncomfortable truths. That puts you ahead of 80% of people who clicked on this video. Now, before we dive into the 4 mental frameworks that actually work, I need you to do something for me. And I need you to be completely honest with yourself here. No judgment, just raw honesty. Think back to the moment you opened your first trading account. Could be last week, could be 5 years ago. Doesn't matter. When you made that first deposit, whether it was $50, $100, $500, $5,000, what was the first thought that popped into your head? Was it, I'm going to spend the next 6 months mastering risk management and building a systematic approach to the markets? Nah, be honest. It was probably something more like, okay, if I can just double this a few times, maybe turn this into $1,000 by next month, then I can put more in and really start scaling. Or maybe it was, I saw that guy on YouTube turn $300 into $15,000 in 2 weeks. If I can just copy what he did. Or the classic, I just need one good trade, one big win to prove I can do this. Am I right? Look, I get it. I've been there. We've all been there. I'm not judging you. I'm not saying you're stupid or naive. What I am saying is that mindset, that let me just double this quickly mentality, is the exact psychological trap that has destroyed more trading accounts than any market crash, any economic recession, any black swan event in history. It's not the market that kills you. It's your own mind. Let me paint you a picture of what this looks like in practice. You deposit $100. You're excited. You've been watching videos, you've learned some patterns, you think you're ready. First trade, you risk $10. 10% of your account because, hey, it's just $100. You can afford to lose it, right? You win. Now you've got $120. Second trade, you risk $12. You win again. Now you're at $144. You're feeling like a genius. You're thinking, holy crap, at this rate, I'll have $1,000 in like a month. Third trade, you risk $14. And it doesn't go your way. Stop loss hits. Now you're at $130. But you're not worried because you're still up, right? Fourth trade, You want to make back what you lost, so you risk $15 this time. Just a little more. It's fine. Loss. Now you're at $115. Fifth trade. Now you're getting frustrated. You need to make this back. You risk $20. Loss. Now you're at $95. You're down from your starting point. Panic sets in. Sixth trade. This has to work. I'll risk $25. I'll make it all back. Loss. Now you're at $70. And just like that, in less than a week, you've lost 30% of your account. Not because you're stupid, not because your strategy doesn't work, but because you're in an emotional death spiral. Sound familiar? This is what I call the trading death loop, and it looks like this. Deposit money with unrealistic expectations. Get excited and take oversized risks. Have initial success, luck. Get overconfident. Have inevitable losses, probability. Try to make it back, revenge trading. Blow up the account. Blame the market, the strategy, or yourself. Take a break, deposit again. Repeat the entire cycle. 92% of retail traders are stuck in this loop. They cycle through it over and over, never understanding why it keeps happening. But here's what the market actually is, and this is going to sound harsh, but it's important. The market is a machine. A neutral, emotionless machine. It doesn't care that you need $5,000 by next month to pay your rent. It doesn't care that you saw some guy on Instagram flip $500 into $10,000 in 3 days. It doesn't care that you've been studying for 6 months and you deserve a win. It doesn't care. The market is simply a mechanism for transferring money from the emotional to the disciplined, from the impatient to the patient, from those who haven't figured out the mental game to those who have. And here's the thing that's going to blow your mind. The people on the other side of your trades, the ones actually making consistent money, they're not smarter than you. They don't have better indicators. They don't have insider information. They're playing a completely different game. While you're trying to double your account every month, they're trying to grow it by 3 to 5% per month and compound over years. While you're risking 10% per trade trying to hit home runs, they're risking 1% per trade and playing for base hits. While you're checking your account every 5 minutes, getting emotional about every tick, they're checking in once a day and focusing on execution over results. They've figured out what I'm about to teach you. And that's what these next 4 mental frameworks are all about. But before we dive into them, I need to tell you something that might save you years of pain. You cannot rush this process. I know you want to. I know you think you're different. I know you think you can be the exception. You can't. And the sooner you accept that, the sooner you'll actually start making progress. Turning $100 into $1 million is not a 6-month journey. It's not even a 2-year journey. It's a 5 to 10-year journey, minimum. And I know, that's not sexy. That's not what you want to hear. That doesn't give you the dopamine hit of thinking you'll be rich by summer. But would you rather I lie to you like everyone else? Or would you rather I give you the actual truth that can change your life? The truth is this. Time is going to pass whether you're trading or not. 5 years from now, you'll either be looking back at today as the moment everything changed, or you'll still be stuck in the same trading death loop, wondering why it never works. The choice is yours. So let's talk about the 4 mental shifts that will determine which path you take. And real quick, if you're still with me, drop a comment right now. Just say, still here, or let's go, or whatever. I want to see who's serious about this, because we're about to go deep. Now, the first mental shift is probably the most important one, and it's going to sound almost too simple. But don't let that fool you. Mental shift number 1, the seed principle. Your trading account is a seed, not play money. Most traders know they should protect capital, but very few actually embody it. There's a difference between understanding something intellectually and living it in your actions. If you see your trading account as extra or play money, you will trade it carelessly, and you will lose it. Your behavior always follows your beliefs. I learned this the hard way. I grew up around a broke mindset. Money came in, money was spent, and stress followed. When I started trading, I treated my first $200 the same way, disposable. It was gone in 2 weeks. That's when the shift happened. Your trading account isn't money. It's a seed. You don't eat seeds out of impatience. You don't gamble them for quick results. You plant them, protect them, and give them time. That's how compounding works. Why small, consistent growth wins. Most traders chase big wins. Professionals chase consistency. At just 3% per week, a $100 account can compound into over $1 million in 7 years. Even 1 to 2% per week still creates life-changing results over time. The exact number doesn't matter. The principle does. Small, consistent, compounded growth always beats reckless, emotional trading. High-risk trading feels exciting, but a few losses in a row wipes you out and destroys your psychology. Conservative risk keeps you in the game. The seed protection framework. 1. Risk only 1 to 2% per trade. Build correct habits while your account is small. 2. Stop trading after a 6% weekly loss. This protects you from emotional spirals. 3. Treat withdrawals like eating seeds. Only withdraw when it truly matters. 4. Celebrate discipline, not profits. Perfect execution for a month is a bigger win than a lucky trade. Hard truth most traders avoid. If you need trading profits to pay bills, you're already in danger. Desperation leads to emotional decisions, and emotional traders don't survive. Trading should start as a long-term skill, not a short-term escape. Handle survival with other income. Build trading patiently on the side. Final takeaway. The market doesn't reward intentions. It rewards discipline. Every trade is either watering the seed or poisoning it. If you treat your account like play money, it will disappear. If you treat it like a seed, it will grow, naturally, quietly, exponentially. The choice is yours. Mental shift number 2. Doing nothing is a skill and a weapon. This mental shift is hard, not because it's complicated, but because it goes against how your brain is wired. The ability to do nothing is just as valuable, sometimes more valuable, than the ability to trade. Most traders hear that and immediately resist it. I'm a trader. Traders trade. And that belief is exactly what destroys accounts. I learned this the expensive way. In 2022, I got approved for a $50,000 prop firm account. First month, I crushed it. Over $4,000 in profit. I felt unstoppable. Then the market changed. Price got choppy. Ranges everywhere. My breakout strategy stopped working. My win rate collapsed. And instead of adapting, I kept trading. Every single day. Not because the setups were good, but because sitting on my hands felt wrong. It felt lazy. It felt like I wasn't working. By the end of the second month, I'd given back all my profits plus another $2,000. One more bad month, and I would have lost the account. When I talked to my mentor, he asked me one simple question. How many days did you trade? Then another. How many days actually had quality setups? That's when it hit me. I wasn't trading the market. I was forcing it. The market doesn't reward activity. It rewards accuracy. Your brain confuses being busy with making progress. Clicking buy and sell gives you dopamine, so you feel productive, even when you're bleeding money. That's why overtrading feels good in the moment and destroys you over time. Professional traders understand something beginners don't. They spend most of their time waiting, not executing. Execution takes minutes. Waiting takes discipline. And that's the paradox. The market rewards patience, but your brain punishes it. When you wait, your brain hits you with boredom, anxiety, and FOMO. When you overtrade, your brain feels relieved, but your account pays the price. So you have a choice. 1. Feel productive now and lose money later. 2. Or feel uncomfortable now and make money later. Most traders choose the first option. Don't be most traders. What changed everything for me? I stopped trading every day and started classifying market conditions. I used a simple system. 1. Green light, perfect conditions, trade normally. 2. Yellow light, decent but not ideal, only A+ setups, smaller size. 3. Red light, bad conditions, no trading, just observe. That month, out of 20 trading days, only 6 were green lights. So instead of forcing 40 to 50 trades, I took 14 total. My win rate jumped. My profits came back. My stress dropped massively. Trading stopped being an obsession and became a process. That's the real secret. The less you force trades, the more the market gives you. Key takeaway. Doing nothing isn't laziness. It's selectivity. It's discipline. It's professionalism. Every bad trade you don't take is money saved, and money saved is money that can compound. If you go back through your trades, you'll probably see this clearly. Most of your losses came from trades you knew you shouldn't have taken. Imagine if you just sat on your hands. That's the power of patience. Mental shift number 3. Losses aren't failure. They're the price of mastery. Let's talk about losses, because this is where most traders mentally fall apart. Most of us have been there. You take a losing trade, and then you replay it in your head for hours, days, sometimes weeks. You question the setup, then your strategy, then yourself. Eventually, you start wondering if trading just isn't for you. I know that feeling very well. In early 2021, I had grown a $500 account to $3,200 over 8 months. I was confident, calm, disciplined. Then one trade went wrong. EUR/USD. Clean setup, normal risk, stop loss hit. That should have been the end of it. But instead, I re-entered. Then, I sized up. Then, I revenge traded. By the end of the day, I was down almost 30% of my account. I didn't just lose money, I lost confidence. I honestly thought about quitting. When I talked to a friend who'd been trading for years, he said something that changed everything. If you followed your rules on the first trade, you didn't fail. You succeeded. That hit me hard. Because the truth is this: every successful trader loses money. Regularly. The difference isn't whether you lose. It's how you mentally process those losses. Most traders think loss equals failure equals I'm bad at trading. Professionals think loss equals cost of business equals expected outcome equals move on. That's it. That's the shift. Losses are business expenses. Think of trading like running a coffee shop. Some days you profit. Some days you barely break even. Some days you lose a little. You don't shut the business down because of one slow day. You look at results over time. Trading works the same way. Losses are your rent, your inventory, your operating costs. They're built into the model. If your strategy has a real edge, losses are required for profits to exist. What actually matters? It's not about winning every trade. It's about 1. Keeping losses small, 2. Letting winners be bigger, 3. Executing over a large sample size. You can be wrong almost half the time and still make serious money if your winners are larger than your losers. That's how professionals operate. How to mentally handle losses without spiraling. Here's the simple process I use. 1. Feel it, briefly. Give yourself a few minutes to feel frustrated or disappointed. Don't suppress it, just don't live in it. 2. Journal it, objectively. Did you follow your rules? What did the market teach you? Are conditions changing? 3. Reframe it, intentionally. Not, I lost money, but I paid tuition to learn how this strategy behaves in this market. 4. Return to process. Your job isn't to win this trade. Your job is to execute well over hundreds of trades. That's it. Loss to data to adjustment to next trade. The big psychological truth. To be profitable, 1. You must be okay being wrong quickly. 2. And comfortable holding winners longer. Most traders do the opposite. 1. They hold losers to avoid being wrong. 2. And cut winners early to feel safe. That emotional mismatch is why accounts bleed. Professionals flip it. Small losses, big wins, no attachment. Final reframe. Every trade is an experiment. Sometimes the hypothesis works, sometimes it doesn't. Either way, you collect data. And over time, that data becomes your edge. So say this out loud after every loss. This is tuition. I'm learning what doesn't work so I can focus on what does. Because losses aren't the enemy. Unprocessed losses are. Bottom line. Losses don't define you. They refine you, if you let them. And if you can truly accept that, you've already separated yourself from most traders. Mental shift number 4. Your strategy doesn't need to be perfect. Your ability to adapt does. This is the big one. The shift that decides whether you're still trading 5 years from now or whether you quietly disappear with the 92%. Here's the deadliest phrase in trading. But this strategy used to work. That sentence has destroyed more accounts than bad entries or blown stop losses ever have. Here's how it usually plays out. Someone finds a strategy, maybe breakouts. For a few months, it works beautifully. They're winning. Confidence goes up. Ego kicks in. They start thinking, I've figured this out. Then the market changes. Losses show up. Win rate drops. Nothing makes sense anymore. And instead of adapting, they double down. They increase position size because it has to work again. They force trades because this is my strategy. They hold losers longer because it always comes back. Why? Because their ego is attached to being right. They've told people about it, built their identity around it, and they can't accept one simple truth. The market doesn't owe you consistency. Real example. Why adaptation matters. In 2020, during the COVID volatility, markets were exploding. Breakout and momentum traders were printing money. Everyone thought they were geniuses. Then, 2021 and 2022 hit. Volatility dropped. Markets chopped. Price ranged. Those same strategies that worked in 2020, they got destroyed. And I watched trader after trader blow their accounts, not because they forgot how to trade, but because they refused to adapt. They kept trading a 2020 strategy in a 2021 market. The ones who survived did one thing differently. They adapted. They changed strategies. They reduced size. They switched time frames or instruments. They stopped asking, "Why isn't this working?" and started asking, "What does the market need from me right now?" That's the adaptation edge. Why most traders can't adapt. Because adaptation requires killing your ego constantly. Your identity becomes a trap. I'm a trend trader. I'm a scalper. This is how I trade. But the market doesn't care who you think you are. If your identity stops you from responding to what the market is doing, you lose. How professionals actually adapt. I use a simple 3-level approach. Monthly, I review performance. Is my strategy still working in these conditions or not? Weekly, I look at volatility, news, and sentiment. I decide whether to trade aggressively, conservatively, or not at all. In real time, if a trade doesn't behave the way it should, I exit early. I don't hope, I respond. Rigid traders hold and pray. Adaptive traders adjust. Adaptation in real life. I used to be a pure day trader. Then life changed. I couldn't sit at the screen anymore. Old me would have quit. New me adapted. I shifted to swing trading. Different pace, different psychology. Within a few months, I was profitable again. Same principles, different execution. How you build adaptability. 1. Learn multiple strategies for different market conditions. 2. Don't marry one market or one time frame. 3. Practice flexibility on purpose so you don't get stuck on autopilot. Professionals don't cling to one tool. They switch tools based on the job. Be like water. Water doesn't fight the container. It adapts to it. Over time, water can carve through rock, not by force, but by flexibility. That's how long-term traders survive. One important distinction. Your principles never change. Your tactics do. Principles: protect capital, manage risk, trade with an edge, stay emotionally neutral. Tactics: strategy, position size, time frame, instrument. Same foundation, flexible execution. Final truth. The traders who turn small accounts into big ones aren't the ones with the perfect strategy. They're the ones who kept adapting through every market cycle. The market will change. The only real question is, will you change with it? All right. If you're still here, that already says a lot about you. Most people don't have the attention span to sit through long-form content like this. You did. And that tells me you're serious. You're not just watching. You're actually looking to change something. So let's talk about what happens next. First, subscribe and turn on notifications. Not later, not "I'll remember." Right now. I'm not going to flood your feed with daily fluff just to chase the algorithm. I post deep, high-value videos like this maybe once or twice a week, and if you're not subscribed, you'll miss them. Simple as that. Drop a comment and tell me, which of the 4 mental shifts hit you the hardest, and why?